Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne with Annabelle Jewelers.
Our top stories. Investors are very much digesting these fresh trade threats from President Trump, who's now flagging a 200% levy on pharmaceuticals and 50% on copper. He's also doubling down on the August 1st deadline for country-specific tariffs.
China's June CPI out this hour, expected to show prices stuck in deflation as the consumption recovery fails to fire. Factory gate prices heading for a 33rd straight month of declines.
And at Min Low in Kuala Lumpur, where the U.S. Secretary of State will attend this week's ASEAN meetings, Marco Rubio's focus on security issues and China said to be overshadowed by President Trump's latest tariff threats.
We'll take a look at market action this morning, and very much that focus is on these levies that President Trump is vowing, not just on pharmaceuticals, but copper is the big focus. And I want to kick off with the market reaction that we've seen, because yesterday, when this was announced, we did see a huge spike in the US contract for that. But we are this morning seeing it a little bit under pressure, but importantly, the London one is also in the red. And the reason for that divergence that you're seeing is because if you do have those extra duties on copper imports into the US, it means less copper potentially in the US, but more for the global market. So that explains the sort of divergent reaction that we saw initially, even though both of those contracts are in the red this morning. Taking a look at what we're seeing across equities this morning, again, it's pretty much wait and see mode here. You're seeing equities a little bit to the downside, but mainly traders are still continuing to assess, because yesterday we had some indications perhaps there was flexibility on these tariff negotiations. Yes, that August 1st deadline, but that window that had been open for further negotiation, President Trump really sort of walking back on that, taking a more hardline stance overnight. And so you see that sort of risk aversion reflected so far in the session. But let's take a look at how copper stocks are faring, of course, because that is where a lot of the trading action has been so far in the session. You are seeing most of these under pressure so far. Pharmaceutical, as I said, it is the other big sector in focus. President Trump is looking at up to 200% levies on certain imports or companies. Again, a bit of a divergent reaction so far, but certainly these are the companies in Asia, Japan, Korea and Australia that see sales of up to 97% rather into the US market. That's Telix Pharmaceuticals, for instance, listed in Sydney. Taking a look at the open ahead for China today, again, it will be a little bit more cautious, the sentiment across the board, and you can see that reflected. A couple of things in focus. Firstly, we've got the Hong Kong listings. It is a bumper day for debuts today in the session. So it's that IPO pipeline that remains really strong in Hong Kong. The other factor we're watching very closely, and this is away from the US, but it's that trading relationship between China and the EU. And that also has shown signs of deteriorating, Yvonne, overnight.
Yeah, certainly that's one to watch, but let's get back to what we heard from President Trump, right? Vowing to push forward with his tariff regime. He's stressing he will not, as Bell mentioned, offer additional extensions on country-specific levies set to hit in early August. And let's bring in our North Asia chief correspondent, Stephen Ingles. He's with us.
Yeah.
What is the state of play right now when it comes to sectoral and reciprocal tariffs?
Yeah, so yesterday there was the market reaction was fairly muted to this barrage of announcements, including, of course, these letters that were sent out to some 14 nations, including Japan and South Korea, promising these are going to be your tariffs if a deal is not done by August 1st. And he also said at that time that he wasn't 100% firm on those deadlines. Well, the market took that as, okay, maybe the proverbial can is getting kicked down the road. Well, today, maybe his advisors said you were too soft, you were not as firm. I don't know. He came out very definitive today on the deadline, saying there's going to be no extension beyond August 1st. And also he gave more details on the threatened sectorial duties. Bell just ran through, obviously, the copper and its impact, but pharmaceuticals as well. So you're talking about a possible 50% rate on imported copper. That's in addition to the 50% rate we're already seeing on steel and aluminum. So the metals industries getting hit. We're also seeing the pharmaceuticals, very interesting development there, because if outside foreign drug makers do not come in and make those drugs in the United States within the next year, maybe year and a half, It doesn't move that quickly, by the way. It would be a possibly 200% import duty. So the markets are being roiled by all these more definitive, forecasts and threats, I guess you could say, from Donald Trump. But on the tariffs, the EU and India were two markets that we looked at yesterday, Yvonne, that essentially said, okay, he's not sending letters to them. And he also talked up that there's a potential deal in the work. He's poured some cold water on that, highlighting in the EU and we'll talk about India in just a second, that he's not pleased with the fines and also the levies on U.S. tech firms. And within the next couple of days, he could be coming out with unilateral declaration of new tariff rates on Europe, one of the biggest economies, trading partners with the United States, that he just 24 hours previously had said there's progress.
What a difference even a couple of hours can make, it seems, for the Trump administration. But let's talk about India then, because, as you said, we had those hopes yesterday. Maybe we were close to a deal. But this morning or overnight, it seems like the focus is very much on the alignment and the involvement in BRICS.
Yes. Remember also 24 hours ago, seems like a world away, we were seeing those Southeast Asian nations like Indonesia, like Thailand, kind of expressing dismay. I thought we were working close to a deal, right? That was the essential feeling. But then they got slapped with the exact same tariff that they got on April 2nd. So were those negotiations up until now for naught? Well, India felt the same, different feeling. Maybe they're feeling the same sentiment today because they thought they were getting closer to a deal. But now Trump is talking about essentially your alignment with BRICS as Brazil, Russia, India, China, and South Africa. Your alignment with this trading bloc after that meeting in Brazil, where they essentially roundly condemned U.S. policy in Iran and the attacks there, as well as unilateral approach to trade. If you're aligned with BRICS and any other nation aligned with BRICS, you're going to get a 10% baseline tariff on top of whatever unilateral tariff or reciprocal tariff, as well as sectoral tariffs. So again, that is throwing some cold water on a potential deal. If there's going to be another 10%, he says, I can play that game too, Donald Trump, quote unquote, when he was talking about the BRICS was set up to hurt us. And I think we need to talk a little bit more about BRICS because essentially, in addition, as I said, to Brazil, Russia, India, China, South Africa, there's also Indonesia, Iran, Egypt, and UAE are members, and Ethiopia added as members of BRICS. And keep in mind, Thailand, Malaysia, and Vietnam are partners with BRICS. So if he's going to be going after BRICS nations, we can have a few more days, if not weeks and months, talking about this.
Yeah, it's certainly an expanding group, so it's going to be very difficult if countries are in that position where they're forced to choose a side, which is obviously part of the US's goals here. But that was our Chief North Asia correspondent, Stephen Engel, there, and we can get more on this. Bring in Bill Lee, Chief Economist and Executive Director at the Milken Institute. And I think, Bill, just picking up on what Steve was saying there, I think part of the confusion sometimes can stem from the fact that tariffs have a range of different purposes. You can either be looking to correct trade imbalances, collect duties, coercive actions as well. Does that contribute to the confusion that we have around what's been announced so far?
President Trump loves tariffs so much, and he uses it way too much. I think most economists will tell you one policy instrument really should be directed toward one policy goal. Now, if you have different policies for every country, and you don't want the kind of World War II WTO-based rules-based system because it's no longer adequate for the 21st century trade, which is what President Trump believes. He wants to reshape the system and to have much more in the way of bilateral and regional deals. And that's why he's asking every country, come make a deal. And if you don't, I'm going to give the stick of high tariffs to incentivize you to quickly make these deals. Unfortunately, most countries have treated the offer as though it was under the lawyer-like rules-based system where it would take years to negotiate these deals. And I think President Trump is saying, look, I need a framework. I need something that you're going to agree to. More importantly, I need you to open up your markets. We're no longer worried about tariffs. We're really worried about non-tariff barriers, which so many countries, especially in the EU, Japan, and other countries, have put up in place of tariffs. And I think those are the objectives I think President Trump is going after. But again, remember when he first got elected, he said to to the World Economic Forum, U.S. is open for business. Please invest in the United States, partner with us, produce your stuff here, and you'll be protected not only with smaller governments, lower taxes, fewer regulations, but also a protective barrier of tariffs to protect you from unfair competition. That was the package he offered. And so far, he's getting the fewer regulations and lower taxes in place, but the tariffs themselves have only come in place for what, UK, China, and one other country. so those deals just are not being. He's getting frustrated.
Yeah, it's interesting that. So we know why he's trying to tackle certain multiple fronts, right? Different MAGA goals, but how likely is he really going to deliver and actually achieve those goals in what way? And how do you think that they need to recalibrate their strategy moving forward?
I think he felt it was important to be disruptive and very quickly disruptive because, again, he's facing a tight deadline of his own. By the time midterm elections come around, everything is done. He's become a total lame duck president. And so all reforms that are going to be put in place are going to be done between now and midterms. And this international reform is really going to be the most difficult because, again, it was created by a whole bunch of lawyers for over many, many decades. And it's going to have to be reformed very slowly. But he wants to put in place the notion that come to the United States, partner with the United States, and you'll be treated like a valued partner with low tariffs. If you don't do that and insist on producing abroad and coming in, you're going to face a high tariff barrier. That's the notion he's trying to push very hard right now. And again, he's got a short timeline to put at least most of the frameworks in place.
Do you think that it has the intended effect, and I'm thinking more about the coercive purpose here, will it change any of the actions of major trading partners, specifically China?
The key question for every question to ask themselves is, how important is the U.S. market to your exporters? If you can find other markets, then I think that they're going to say to President Trump, hey, keep your marketplace. We can find the same profit somewhere else. Unfortunately, the U.S. Americans are such great consumers that we import so much from the rest of the world. It's going to be very hard for many countries to find replacements. And also, I think the United States is learned its lessons from COVID and realizes there are strategic industries it just has to have at home, even if it's more expensive, like pharmaceuticals and some of the metals that you're seeing, the high tariffs that are being put on to protect and incentivize more production in these strategic industries.
I'm looking at something like copper prices, right? Given the threats of 50% tariffs on U.S. copper and, the whole inflationary pressures that we're seeing across, all these certain types of goods and then whatnot. But we're not seeing it quite in the data just yet, Bill. Are we going to? And how much sort of inflationary pass-through are we going to see to consumers?
Yvonne, every economist by instinct says tariffs are terrible because they are inflationary, they reduce growth, they're a tax on consumers. All of that is true. But again, remember why it is that President Trump is using this particular tariff instrument. He wants to incentivize investments in the United States, produce more stuff in the United States. If you produce more stuff, that is disinflationary. And remember, the U.S. is a very closed economy. Imports consist about 14% of GDP. Consumers' consumption basket is about 65, 70% services, which are domestic, non-traded stuff, and 30% goods. Of the 30% of goods, maybe 25, 30% of those come from imports. And you can say there are indirect effects and stuff like that. But if you have even a doubling of the price of imports, the amount that'll show up in the CPI, which is, again, heavily biased toward domestic, non-traded services, it's going to have very little impact because we saw from the experience of the first Trump administration where tariffs went in, CPI went up by about a quarter point over about 2-3 years. That's hardly measurable. That's round off error.
But is there deterioration, do you think, in the health of the U.S. consumer? I mean, one of the sort of more very micro indicators this morning is the Amazon Prime Day spending, which is down around 15% in the early hours from last year. But, of course, consumers can be waiting for further discounts. What do you make, though, of the health of the U.S. consumer right now?
And well, that's a great point. When you look at retail sales, you saw that it really slowed down quite a bit in the last month. That's because all these consumers bought the consumer durables and appliances in the months before. But at the same time, if you look at sort of the items that people consume on a regular basis, something called retail control, which is what goes into GDP, that really increased at a fairly healthy clip. Now, no doubt about it, consumption is slowing down from a more unsustainable pace of like 2.5%, almost 3% growth in the last half of last year and early first quarter. to a more sustainable pace of about 2% or a little bit less than 2%. So I think there's no doubt there's a slowdown. There's a slowdown in the labor market as well, because the private sector just isn't hiring as quickly as it did before. But it's nowhere near below trend. It's nowhere near something that would cause people to worry about recession. And I think the fear mongers have really gone way overboard in saying, oh my God, there's danger of recession, there's danger of hyperinflation, there's danger of stagflation. All the inflations haven't shown up yet, except in soft data. When people are asked their opinions and people are hyped up by a lot of the news stories that, oh, gee, we're going to see more inflation. Yeah, their opinions are saying, yeah, we are expecting more inflation. But if you look at the financial markets and where the break-evens are, that has come down to about 2.25 and stayed 2.25 for almost 6 months. So I think the financial markets are pretty much getting it right. That the inflation surge, is, if there's any, is going to be hardly measurable. And inflation expectations have really been fairly anchored at 2.25, which is what has comforted the Fed all this time.
Yeah. The market's pricing, what, 2 cuts now, a little bit more aligned with the Fed. Is that the right sort of pricing you think right now, leading up to the end of the year, Bill?
Well, compared to consumer surveys, I would tend to believe the financial markets, because after all, those are where the pros are putting millions and millions of dollars on the line. And when you ask opinion polls, depending on whether it's the Michigan survey, which is heavily biased toward Democrats, or other surveys, again, people's opinions change on the dime depending upon the news stories they hear. And unfortunately, a lot of my peers and my colleagues in the economics profession are telling everybody, hey, you're going to have high prices coming in front of you. You better start worrying. And people start worrying.
Bill, we got to leave it there, but thank you so much. Bill Lee there, joining us from Milken, the chief economist and executive director. We got some breaking news when it comes to what we're hearing in the trade front with China this time. So they are now putting 8 Taiwanese military equipment producers under this exports control list. This is according to the Ministry of Commerce here. So companies include the likes of aerospace and industrial, for example. And those measures, according to the Commerce Ministry, is effective immediately. We'll continue to watch that one as well. But yes, banning the exports of dual-use items exports for Taiwan. And yes, Belle.
No, I was just going to point out as well, it's interesting the timing of this, because Taiwan is about to kick off its most expansive annual military drills ever, to essentially go over 10 days, but double the usual number, and more than 20,000 reservists are being called up. So certainly it is a time of rising tensions, I guess, and questions of Taiwan, how it would protect itself in the event of any kinetic conflict.
All right, we're counting down the opens of trade in Shanghai, Shenzhen, and Hong Kong. This is The China Show.
You're watching The China Show this morning, and very big focus, of course, on what's happening in the metals space. I mean, we've had President Trump just overnight doubling down on his tariff threats and also bringing in new areas. And copper, the big focus today. I mean, we had a huge surge on the US contract overnight. It's under a little bit of pressure this morning so far, but certainly, I mean, you can see there a jump of nearly 12% over 2 days. So our metals and mining reporter, Martin Ritchie, joins us now. And Martin, I mean, I guess, you know, this sort of reaction is very much expected.
Yeah, another big shock for the copper market last night. It looks like there's going to be a tariff possibly of 50%, which is perhaps higher than people expected on copper imports into the US. As you said, the price in New York, which is the main US contract, went up by as much as 17% last night, immediately after that, and it has come down a bit. Look, the basics of this is that there's going to be less copper available in the US and more for the rest of the world. And that's why you're seeing the LME price, the London Metal Exchange price, which governs the market in the rest of the world, come down a little bit this morning. We're still waiting for really a lot of details, though, around the tariff. We've got a notional number, I guess, from Trump. But it's possible there could be exemptions, for example, for some suppliers to the US or for some types of products to the US. We don't really know the depth and scope of the tariff as yet. So that's why markets are still a little bit cagey after the run-up yesterday.
Yeah, Citi had an interesting note saying that this is a watershed moment when it comes to the copper market this year, that if we see these tariffs implemented imminently, that this would abruptly close the window for further significant U.S.-bound copper shipments, possibly for the rest of 2025. Is that sort of the narrative that you're seeing among some of the analysts and people that you talk to right now?
Yeah, that's right. So this is about the kind of rush to get copper from anywhere in the world, a lot of it from Asia, to the US, get it imported into the US before any tariffs are imposed. Because Trump has sort of front-run this by, saying, by launching in not long after he came to office that he was going to target copper. So that's triggered over the past months traders, producers trying to send as much as possible to the US, in the hope that the copper gets there, and then it becomes much more valuable if it's in the US warehouse. The announcement now, and particularly because Secretary Lutnick also said this tariff would be imposed at the end of this month, August the 1st possibly, that's probably put an end to that trade for now.
All right, Martin, thank you. Martin Ritchie there, Bloomberg Metals and mining reporter. And yeah, we'll continue to track those copper prices here. The biggest one-day spike on record when it comes to COMEX futures as well. And briefly touched that all-time high as well. Here's how the pre-market in Hong Kong is shaping up today. It's a big listing day. We talk about 5 big ones that are going to be listed here. Lens Technology, the Apple supplier, is certainly one of the bigger ones, which we'll tell you about as well. We are seeing, when it comes to the pre-market, slightly to the downside here today. Futures are pretty flat this morning, and renminbi holding around 718 levels. We're watching Headers and Land in particular as well. In particular, when it comes to what we're seeing in the property sector, they're offering this convertible bond of up to 8 billion Hong Kong dollars that's due for 2030. The stock down, so 5%. All right, it seems like every day there's a new listing in Hong Kong, right? But today's a big one in particular. So 6 listings, 5 of which are stocks. One is an ETF, but Lens Tech, that's the big one here today. And 48 Technology, that's up some close to 9% right now. But Lens Tech, that's more household name, given its Apple supplier. And yeah, the world's second richest Chinese woman owns that company too.
Yeah, it's a really great business story. And I think as well, it's going to be interesting to watch because we had seen the shares already rising in grey market trading. They're actually priced at a pretty significant discount to the Shenzhen listing. I think around a 30% drop to the Friday close that we had for the mainland stock. But certainly this is a bumper debut for Hong Kong. And we've been talking about Hong Kong possibly looking to even take the IPO crown globally this year. So we're going to have more on these debuts just ahead. You're looking there at a live shot from the Hong Kong Stock Exchange.
Six gongs.
Up on the stage. We'll have more ahead on the China Show. This is Bloomberg. You're watching the China Show, and Yvonne was just saying this is the moment. You might want to either turn your sound down, put some earmuffs on, but you can prepare for what is going to be a bumper listing ceremony this morning in Hong Kong. So we're panning across here down at the local stock exchange, but 6 gongs are up on the stage. So you've got 5 companies that are listing today, 1 ETF making its trading debut. But certainly if you need sort of a signal or a symbol of how the Hong Kong IPO pipeline is heated up, I mean, this is it right here, right now.
What should they do? They're going to hit it all together? Are they going to do a chord or do a sequence? Who knows? Okay, Lens Tech certainly is the one opening higher here this morning. We also got Geek Plus, 48 Technology. So these are just a few of the ones that are about to now bring that gong to a big bang. Let's count down right now, of course, to their debuts. All right, I could hear the reverberations from here, from the Hong Kong Stock Exchange.
A lot of excitement down there this morning.
Yeah, so we'll see how these listings turn out here today. Certainly, as we talked about Lens Technology, that one, as you mentioned, has a bit of a steep discount. But yeah, still market at the top end of the range. The demand picture, certainly for some of these tech stocks, these growth stocks in Hong Kong, is still very much there. What we're dealing with today, of course, is still the headline risk with what Trump mentioned there. Vowing no tariff extension August 1st is firm when it comes to the implementation of these levies. Stocks aren't doing a whole lot here. But then again, we're watching very closely what happens with copper prices there. We should have the copper price there. There you go. We're slightly down in the Shanghai futures, though, but following what we're seeing with LME. But keep in mind, the COMEX futures in the U.S. surged the biggest one-day spike since data compiled, I don't know when. So there you go. That's where the divergence is. That spread, they're certainly widening between the U.S. and LME as well. So that's where the point of contention here is this morning. Also, we're tracking this global bond sell-off that seems to be resuming in Japan, in the U.S. Treasuries fell for a fifth straight day as well. We haven't talked about the RBA and what they did, and really wrong-footing traders there yesterday with that surprise hold on rates. So yields are overall in the region heading higher here this morning. And we do have that JGB auction coming up later on today. But 30-year yields, not doing a whole lot in China. That's pretty stable here right now. But you are seeing a decent bit when it comes to CATL A shares, for example. We just had those some car sale numbers that came out of China, which we'll tell you about a little bit more about here today. But here's how Hong Kong is looking up right now. Just given the bumper sort of day we're seeing when it comes to listings, Hong Kong is actually doing this. So a bit of a different picture here. We're down about 0.6%. HS Tech is on offer here today. And you're still seeing quite a bit of sell-off here when it comes to Alibaba, Meituan. It really goes to show where this whole competition around food delivery is really kind of weighing on these stocks. I believe they're one of the worst performers in the Hang Seng Tech gauge of late. Wendy Liu from JPMorgan has a great sort of note talking about the anti-involution, right? How China's going to tackle the excess capacity that you're seeing in sectors like solar, like EV space as well. And maybe that could actually be equity positive. We'll get her take in the next hour as well. But we're watching very closely the tech space. So there you go. Tencent also is down about 1%. Hang Seng Property is also 2%. I believe Henderson Land might be the one that's dragging that, given they are doing a convertible bond sale here today as well. Hong Kong dollar is still on the weak side. And do we have inflation numbers yet, Bill?
Yeah, we do. And actually, I think it's really interesting you make that point around involution and that race to the bottom. Does it actually start to feed into deflationary pressures and have an impact there? But you're really seeing it. And if there's one key message that you can take from the inflation picture this month, it's that there really is no line or end in sight yet for the deflationary pressures. So PPI, we've seen that going further into contractionary territory on the year. So the reading has actually come in worse than economists had been expecting. Contraction of 3.6%. The survey had been for 3.2 or negative 3.2, and a deterioration from the month prior where it was negative 3.3. So that is the 33rd straight month here of factory gate prices extending their drop. On the CPI side, this has actually come in a bit better than expected. So the survey had been for, again, contractionary territory for a fifth straight month. Actually, we've rebounded here or recovered into slight positive or modest rise here of 0.1% instead. So you're reversing that earlier trend, again, when we had seen prices in contraction. But in aggregate here, as we said, no end in sight yet, really, for deflationary pressures in China.
Especially, at least when it comes to factory prices, right? 33 straight months certainly is a trend. What's going on the CPI side? Let's bring in Erica Tay, economist at Maybank Investment Banking Group. She joins us now. Erica, interesting enough with the CPI numbers that we are bucking 4 months of deflation. Why do you think we're seeing a bit of a surprise here?
Well, I think the short answer is oil. So we were looking at CPI inflation of 0%. So the outturn came in a little bit better than we expected. And we all recall that in June, actually, oil prices spiked up a little while to the 80s. And I believe that brought up energy costs in China. So that is probably the bump. And right now, crude oil prices have come back down into the 60s again. So I think the improvement in headline inflation might not be quite so sustainable. So we're still looking at CPI inflation for the full year at quite a low 0.4%. And then in terms of producer prices, I think you can still see the wreckage filtering through from the weak property market. So construction starts are actually on track to fall by 3/4 compared to the peak in 2019. So that is overall depressing demand for the heavier industrial materials. And we can see that is why PPI prices have been falling sharper than expected.
So on the CPI side, and just sort of to wrap that up or continue that conversation, what measures do you expect to be then announced? Because we've seen, for instance, that early success with the trade-in subsidies. Do you see this being expanded at all?
So I think the magic about trade-in subsidies is that it's quite immediate. So, if you tell people you get 15 off a mobile phone, they will immediately rush out to buy, which is why you saw mobile sales up 33% the last month, and then appliance sales up more than 50%. But the bad thing about such subsidies is also that people are not going to keep buying mobile phones and gadgets and appliances every month thereafter. So I think even if the subsidies were to be extended, the boost would have faded naturally.
And in some provinces, they're running out of funds that have been allocated by the national government as well. So to your point, Erica, they can't keep going on with these subsidy programs. So what would you suggest, right? What are some more sustainable measures to really revive sentiment?
So I think there's two things. One is to create domestic demand, and I think the government is actually going to roll out more fiscal measures to support social safety net. So I think that is really a more sustainable way of lifting incomes. And then secondly, of course, a lot depends on the job market, which is tied to corporate profits. So we note that for manufacturing firms, about 30% of industrial firms are loss-making as of May. So this is compared to about a quarter of loss-making firms at the end of last year. So it's not a pretty number. And if profitability is continues to decline, then I think companies will have to curb hiring and to curb wages. So that is not a good look for the employment front.
What about the deflationary pressures more on the factory side? Because there's some warnings, for instance, we could see these price wars continuing for years. Is there going to be anything to sort of arrest the decline, do you think?
So I think a couple of things. One, we are not seeing any improvement on the property front, which has been a key source of demand for the upstream materials. But what about the consumer product front? I think involution or intense price competition has to stop. So I think that the government has come in to say that to encourage large firms such as the EV manufacturers to hold back from such sharp price cuts. So I think action or responses by these industry giants might help. But also I think companies are trying to export what they can't sell onshore. So that is also leading to a rush or a deluge of consumer goods exports to the rest of the world from China at falling prices.
Erica, we haven't even talked about tariffs yet. Your markets are still quite optimistic about a framework, at least, that China has struck with the U.S. What assumptions are you making in terms of where effective tariffs are going to be landing in a few weeks or months?
So I think that obviously markets have been quite shaken by Trump's letters yesterday, but we believe that overall the deals will come in and settle at more manageable levels than what was threatened. So I think the letters, we view them more as a brinkmanship or a showmanship. So speaking to the counterparts that are negotiating with the U.S. Government, they say that the trade negotiations are actually going quite well and are wrapping up. So I think the letters or the threats of higher reciprocal tariffs might be a way to squeeze more out of the negotiating parties before an eventual deal. So we do note that America's inflation has been coming in quite benign, and that is largely thanks to the ability of the non-Asian economies, especially ASEAN, to keep on sending goods to America during the 90-day pause. So we saw that actually America's the percentage of American goods imports from Southeast Asia has exceeded that of China since March. So that really is an escape valve to allow a continued flow of cheap goods into the U.S. So I think if the U.S. were to land on the reciprocal tariffs that were threatened in the letters, that escape valve will close, and U.S. inflation might run out of control. So I don't think that is a credible threat.
Erica, thanks so much for your time this morning. That was Erica Tay, their economist at Maybank Investment Banking Group, and taking a look at what's happening with copper this morning. We have seen a really big spike in the U.S. copper contract overnight. We're seeing in the session this morning that copper is actually a little bit under pressure. But the big concern here, of course, is if President Trump proceeds with duties on copper imports into the U.S. of 50%, it means less copper for the U.S. market, more elsewhere. And you are seeing some of these major copper manufacturers this morning, or suppliers, refiners, under pressure so far in the session. So that's the state of play there as we get just under 15 minutes into the session for China and Hong Kong today. We'll have plenty more ahead. This is Bloomberg.
All right, as we talked about, it was a 6-gong ceremony today. If you missed the bang, you can go back on TV Go and you can watch it, right? It was loud. But there you go. There you go. You see these listing debuts here today. You're seeing a pretty decent one when it comes to Lens Tech and 48 Technology as well. Lens Tech, of course, is the Apple supplier. But yes, it just goes to show, right? Every day is almost like a listing debut that we have to talk about. And it really kind of keeps the likes of Manuel Balgore very, very busy. He leads our Asia-Pacific deals coverage. He's with us right now. It seems like this momentum keeps going. How sustainable is it?
It feels sustainable for the time being. Let's see. I mean, people are very optimistic that, this boom in deal making, especially in equity capital markets transactions. We've seen a lot of second listings, some IPOs as well, lots of block trades, convertible bonds, exchangeable bonds. There's a ton of activity in equity capital markets, and it feels that it's going to continue for a while. Definitely a big boon for Hong Kong.
Shein is one that we have heard reports on, and a lot of question marks over this one, though, because is the reporting that we got from other outlets, but that they're looking at listing here or they're filed confidentially, is that also to put pressure on London? And would the London exchange still be the preferred exchange for them to list, do you think?
Yeah, that's a very good question, Annabelle. It remains to be seen. There is a lot of dynamics behind the scenes on this one. We've been tracking it down for years. First in the US, then it was put on hold, then all of a sudden it was London. Then it seemed to be held up in London. Now it's Hong Kong, perhaps, maybe dual listing. There's been a lot of reports out there. We're trying to be kind of like careful in how we assess this one because there is a lot of moving parts. Hong Kong offers now obviously a big venue as well, given the momentum, as Yvonne was pointing out in Hong Kong. But obviously the company was eyeing London in that kind of aim to be a bit of a more global company and also tap other investors in the Western world. Remains to be seen. A lot of moving parts. Definitely, there is work being done towards Hong Kong. Now, whether or not it will be purely Hong Kong, it will be a dual listing, or whether this will happen now or it will take some time, it still remains to be seen. But definitely, the momentum is so big here that everybody is kind of dusting off the books and thinking, okay, should we pursue Hong Kong? I think it makes sense, given where the Hang Seng is
You
trading.
certainly saw that with FWD this week as well. Another thing you're tracking very closely is this whole Starbucks China business and what they're doing with that side of the unit. I mean, they've said they're not considering a full sale of that business, but what are you hearing in terms of what could be happening there?
Yeah, this is a fascinating trend that we are seeing in deals as well. So ECM-related transactions keeping us super busy, but then there is also M&A, and I think Starbucks, and broadly speaking, the multinationals rethinking their approach to China is a fascinating trend. We've seen the likes of Starbucks. We've reported on other companies as well, including Decathlon, for instance, or also General Mills looking into what to do with the Häagen-Dazs, the ice cream stores in mainland China. And there's been many others, right, over the years. Basically, the idea is, okay, how do we keep growing in this very competitive market? They're faced by a lot of competition locally. They still want to stay in China somewhat because obviously it's the world's second largest economy. They can't just ignore it altogether. But at the same time, it's very challenging to remain profitable and grow. So they are looking for partners, potentially local or international, to help them grow and take the company to the next level. I think all the options are on the table, whether it's a minority stake sale, a majority stake sale. The company hasn't fully made up its mind yet. I think it will come down to how strong the process is, the different proposals, evaluation, and then we'll see in the coming months whether that translates into a minority or majority stake sale.
All right, M&A, ECM, you've got us covered on both fronts then. Emmanuel, thanks very much for your time. That was Manuel Baigori there, who leads our APAC deals coverage. And as we said, it's been a really busy day for IPOs in Hong Kong. Tomorrow, we're actually going to be speaking with one of those that just listed this morning. This is Geek Plus. They raised 2.7 billion Hong Kong dollars in their IPO. We'll talk to them about that trading debut this morning. They're actually a little bit under pressure. Again, it has been sort of a mixed start for these companies, but that interview happening at 10:30 a.m. Hong Kong time.
It's right up your alley, right? It distributes intelligent robotic products, Belle.
This is up my alley.
We bring out the geek and Belle on the show. All right.
Too hard, I guess.
Lit Fung joining us there tomorrow. In the meantime, we're trusting to see what's happening in Southeast Asia, right? So U.S. Secretary of State Marco Rubio is heading to Malaysia for an ASEAN summit, with China's Foreign Minister Wang Yi also set to attend. Now, it comes as President Trump threatens new tariff rates on several countries in Asia unless those deals are done by August 1st. Let's get to our correspondent Min Min Lo joining us from KL. So, Min Min, tell us what's in store here today. Obviously, a lot of questions about Marco Rubio stepping down in Malaysia.
Yes, Marco Rubio, the highest-ranking U.S. official to come to Southeast Asia. It is his first trip to this region in his capacity as Secretary of State. So, of course, there will be a lot of talk about tariffs, even though the State Department is not in charge of leading tariff negotiations. But no doubt he's going to be peppered with questions. Perhaps his ASEAN counterparts will be venting their frustration over those tariffs, because a lot of these Southeast Asian nations are still keen to continue negotiations now that President Trump had moved down the deadline for imposition of new levies to August 1st. Remember, Southeast Asia is particularly bad hit by those tariffs. We're talking about 40% tariffs on countries like Laos and Myanmar, over 30% for Indonesia, Thailand, Cambodia, 25% for Malaysia. The State Department has said their main message here is all about committing to a free and open and secure Indo-Pacific. After all, this is a foreign ministers' meeting. Usually the topics at hand will be about geopolitics and security, but of course, this is also a chance for Marco Rubio to reaffirm and reassure the Asian partners here that the U.S. is not about to retreat economically and diplomatically from this part of the world as well.
That was our China correspondent there, Min Min Lo. We will have plenty more ahead. We're back with Min Min, of course, at that summit underway over in Kuala Lumpur, but we'll have more ahead. This is Bloomberg.
Some other China stories that we're tracking for you today. Boeing says it delivered 60 aircraft in June, its best showing in 18 months, reflecting factory improvements and resumption of exports to China. The surge puts Boeing back on even footing with rival Airbus, which delivered 63 jets last month. Boeing had been hit by a series of crises, but momentum has shifted, with Airbus now struggling to hit its production targets. The Trump administration is tightening its grip on foreign ownership of farmland amid continuing concerns over Chinese investment in America's heartland. The Agricultural Department says it will work with state lawmakers to end farmland purchases by nationals from countries of concern of what it calls other foreign adversaries. It's estimated China's investors hold less than 1% of foreign-owned farmland in the U.S.
Taking a look at markets this morning, and of course it's that big focus on the two sectors that are really in the crosshairs. There's pharmaceuticals and also copper. But starting with pharmaceuticals, this is a really interesting one because President Trump, of course, is announcing these or threatening these 200% tariff on pharmaceuticals. But there is quite a large window here. So he's essentially looking for companies to onshore or reshore their production of certain drugs in the US sometime in the next year and a half. Of course, it could take longer than that, but it is quite a window here. And then after that point, these tariffs would take effect. But regardless, you are seeing these stocks under pressure today. Taking a look as well at what's happening in the EV space.
Yeah, so we had some really good car sale numbers in June. It's typically a slow period, but we actually saw here a record month on that subsidy boost, as we've been talking about as well. But it's a mixed picture across some of these EVs, mostly lower in Hong Kong here today, with the likes of BYD down 1.5%. So certainly we'll watch that space very closely. And we're watching China and what the rest of these markets are doing here today. Equities haven't been doing too much onshore. Hong Kong slightly on offer here. But actually we're seeing that now down about 1% in Hong Kong. All right, live pictures out of Wellington here this morning. We're just moments away from that RBNZ decision. And yeah, I mean, they're largely expected to hold. But, you know, the RBA really kind of caught us all off guard yesterday, right? So who knows what the Antipodean economies are thinking here right now. But yes, they have actually been continuing to cut. So maybe there is a bit of a pause here today. But certainly, given the tariff threats and the like, I think a lot of central bankers maybe are starting to rethink just what to do, right, in the midst of this sort of trade uncertainty.
Yeah, exactly. And I think it's obviously a very difficult moment for central bankers around the world. But the RBNZ today, I mean, our Bloomberg economics team, for instance, James McIntyre, is saying this is a moment when the economy actually needs a rate cut, even if he's also conceding it is a toss-up. But what have we got, Yvonne, on that decision?
You know what? It's a hold. There you go. So we did see the RBNZ as expected. I think 19 out of 23 economists surveyed by Bloomberg expected this hold as well. I think only the swaps were priced in maybe a slight chance, 30% chance of a rate cut. So there you go. As expected, they did hold rates. So there you go. They didn't really do what the RBA, well, they did do, they both held. But certainly, this, we'll see what it does for the Kiwi. Obviously, we're seeing a little bit, not much movement, though, but actually reversing some of the initial losses there. But yes, when you have the Fed likely to remain on hold this month, you have the RBA surprise hold. You take a look at how rate differentials and how that's looking. Is that going to continue to move against the Kiwi is a key question there.
Yeah, and I think, though, as you said, it's sort of that question really around inflation as well. And I think it's that trading dynamic and the trade wars that are really yet to still play out. You see that, for instance, in copper. I mean, President Trump overnight threatening a 50% increase or 50% duties, rather, on copper imports into the US. This is something that has wide ramifications given how heavily copper is used across a range of different industries. So taking a look at the copper moves, of course, we saw most of the movement in the US listing. That is the COMEX listing, where we saw a huge spike this morning, though it's a little bit under pressure so far, but still up 12% over 2 days. And we have also seen a reaction in copper stocks. We've seen most of these, particularly in Hong Kong and mainland China, under pressure so far this morning. The concern, of course, is if you have less copper going into the US, it's a less viable market as well. And you do see that pressure being reflected so far in the session today.
All right, let's take a look at what's been going on as well. We're getting some more commentary here when it comes to the RBNZ decision. So when it comes to inflation, so they're saying the inflation will likely rise atop to the 1 to 3% target in mid-2025. So they're expecting maybe there's inflationary pressures to build. Expects to cut rates further if inflation eases. High export prices, lower rates supporting the economy here, and global uncertainty and tariffs to reduce world growth. So there you go. It is leaning slightly dovish, though. You take a look at that. They expect to cut rates further if inflation pressures ease. Let's bring in Mary Nicola, our MLive market strategist. She joins us now from Singapore. Overall, it seems like they reached consensus on this rate decision from the RBNZ, but you're starting to see more of the tariff threats and how it's changing the thinking among central banks as well. Do you see this as more of a pause in this easing cycle or an end to it?
Yeah, I think it seems to be more of a pause, and that's what they're suggesting. So they're looking at what if inflation comes up and some of the inflationary pressures coming through. But at the end of the day, as Bloomberg Economics pointed out, is that the economy is sluggish and needs more easing. So and the RBNZ has left that door quite open. And of course, we saw yesterday the sharp contrast that the RBA was leaning towards, and it was more of a cautious approach. RBNZ here is just trying to say that inflation's likely to rise. We just need to weigh out some of the concerns, but we're still leaning more towards easing to help with the economic recovery. So I think if you play on the contrast between the two, you could see that the RBNZ is leaning more dovish than what we saw yesterday from the RBA.
It seems like, I mean, we've seen Asian shares sort of fluctuating a lot this week just based on the sort of conviction that President Trump has in his tariff policies and exactly what is being threatened on who as well. But what do we see for the direction of trading over the next couple of weeks?
Yeah, it just seems a lot is depending on tariff headlines, and headline risk is really coming back as a major driving force. What I think has so far seems, with the way the market is reacting, is that they're happy with the flexibility that the Trump administration is offering in terms of that negotiations are still ongoing, and that door hasn't closed. I think if you saw that the door was closed in that direction, there would be a much sharper risk-off reaction than what we've seen. And of course, we've seen that markets have remained, especially in Asia, relatively stable. And there's been some sort of creeps of optimism because of that fact. And I think in general, there is still a lot of risks ahead with headlines. We had the copper headline coming through of tariffs of 50%. So of course, traders are thinking, what's next? And you've got to be ready for what's next. So of course, it's important and it's going to be quite important for traders to remain nimble.
Yeah, I'm looking at bonds, though, right? This global bond sell-off, we saw it in the JGB market, and the 30-year yield spiked yesterday. Treasuries are falling for 5 days or so now. It seems like this bond sell-off is picking up again. How tricky is it around the long end of the curve now?
Yeah, there's so much pressure building around the long end of the curve. You're not sure about where inflation is heading. You've also got fiscal profligacy in more than one place, right? Whether you're talking about Japan, US, the UK, there's all these spending. The market is so focused on how much fiscal spending is coming through. So there's just this perfect storm that's almost brewing for a long end and market for long end bonds. And I think that's likely to persist because, of course, we have these fiscal tensions. They're not going away anytime soon. You still don't know what the impact of inflation is. And so I think what you end up is with this increased pressure on the long end, and that's likely to persist for some time.
That was our MLive market strategist, Mary Nicola, there. And taking you to some live pictures now from Kuala Lumpur, we do have the opening ceremony of the 58th ASEAN foreign ministers meeting just kicking off this morning. This is going to be attended by a number of different foreign ministers, also the Secretary of State from the US, Marco Rubio, and certainly taking place under the cloud of these tariff threats from President Trump as well. A lot of countries trying to negotiate their own deals with the US.
Yeah, it's his first trip to the region as, of course, the Secretary of State, and maybe a chance to talk about, what these tariffs mean for this part of the world. As you remember, he's quite hawkish when it comes to his views on China as well. So there you go. We'll see what these, all these nations, ASEAN nations, are probably going to be trying to set up a meeting or at least grab the Secretary of State while he is there as well. In the meantime, this on the backdrop of President Trump vowing to push forward with his tariff regime. He's stressing he will not offer additional extensions on country-specific levies set to hit in early August. Our Chief North Asia correspondent, Steve Ingles, is with us here right now. So a bit of a backtrack from what we heard yesterday.
Sure, and Mary Nicola put it rightfully how the markets looked at it yesterday, and today. Basically, the volatility of headline surfing. I'm paraphrasing what she said. Everyone's looking at the different headlines. Yesterday's headlines were more about, hey, we're not 100% firm on these reciprocal tariffs. There is some room. If you come to us with a good deal, we will enter into negotiations. So he kind of pushed back on the theory that August 1st would be the new hard and fast deadline. Well, the market reacted very, mutedly. Is that a word? Mutedly?
Mutedly?
No, that's not a word. Muted, thank you. So today, Donald Trump came out and essentially said, hard and fast. August 1st, there will be no more extensions. And he went a step or two further as well. And he's basically zeroed in on those sectoral tariffs. In particular, as we've been talking all morning about the copper possibility of a 50% rate for copper coming in. And we've talked about the inflationary aspects of that into the United States, the range of products from electronics to home building to automobiles, you name it, data centers. So that's something obviously to watch. The other one obviously is the pharmaceuticals, saying that it could be a tariff of upwards of 200% if foreign drug makers do not come and make their pharmaceutical products in the United States within a year and a half. So that's the latest developments. He's a little bit more definitive on the whole tariff issue today as opposed to yesterday, and that's on the sectoral issue. We haven't talked about the reciprocal tariffs yet.
And where he's sort of also seemingly hardened his stance is on India as well, and of course it being one of the letters in BRICS.
Well, let's talk India, EU, and China. This is the China show. I do want to mention about China because there was some positive news on the China front. India, just hours after saying essentially a deal was close with India, Trump said he is still possibly considering a 10% baseline tariff on India, essentially because of its ties to BRICS. It is one of the eponymous members of the BRICS, and BRICS was quite critical of U.S. policy over the last weekend as they met in Brazil. So he says anybody who adopts the policies basically adhered to by the BRICS nations as it relates to the United States negatively, they will get that 10% tariff. So again, one step forward, one step or two steps back for India and the confidence they might have had that they're going to have a deal anytime soon. Same with Europe. Europe and India did not, the EU and Europe and India did not get those letters yesterday. So there was speculation that there was some progress on the EU front. But now there's a lot of chatter about the Washington's, opposition to those EU taxes and fines targeting U.S. tech firms. Donald Trump says he'll, within the next couple of days, possibly declare a unilateral new tariff rate against the EU because of that. And finally, on to China. It's the China show. I have to mention this. Lutnick, Bessent, and Trump all talking positively about China. Donald Trump says we've had really good relationship with China lately. We're getting along with them really well. And he says he speaks with Xi Jinping often. We don't have readouts of those. Scott Bessent expects to meet with He Lifeng, his counterpart, on the trade front in the next few weeks. Howard Lutnick, the Commerce Secretary, is saying we're going to kickstart a bigger trade conversation in August and swiftly. They're going to, China is swiftly, he says, approving rare earth exports.
Really makes me think of good cop, bad cop. That can sometimes be played by the same person, that role, it seems. But that was our Chief North Asia correspondent, Stephen Engel, there, and taking a look at the market reaction to this morning, because, of course, we've been monitoring what's happening in the copper contract, not just the COMEX listing, also the London Mercantile Exchange one coming online this morning. And it's been a little bit of a divergent reaction, but broadly you do have those copper names, those companies under pressure so far in the session today. Of course, it's that big question of how much demand are you going to see in copper in the US if you do have these extra 50% duties being applied. The other sector we're focusing on very closely is the pharma one, of course, because you're threatening, or Trump is threatening up to 200% levies on this, but you're watching or you've got a call from ANZ.
Yeah, this just came in my inbox from ANZ Research this morning, and their team basically saying within Asia, if you take a look at who's most impacted by 200% of pharma, it's India, it's Singapore, the most vulnerable to those tariff hikes as well. So we'll check, of course, how this all plays out. But yeah, you are seeing a mixed picture, though, there with some of these pharma stocks today. Let's get now and cross over to Hanoi, where the Tech Combank Investment Summit is underway. And our very own Insight anchor, Haslina Amin, is there and joins us now. Haz, what's on the agenda?
Well, Yvonne, the focus here is really a new Vietnam, how it can create value. And of course, this is coming on the back of those 20% tariffs imposed by the U.S. on Vietnam. Needless to say, just one of the few trade deals that have been struck between the U.S. and its trading partners. Now, this coming at a time when Vietnam wants to achieve 8% growth for the year. And of course, those tariffs are a setback. Remember, Vietnam is the fastest growing economy in Southeast Asia. Now that dream of 8% is under scrutiny and in question. The reason is this. The reason for the tariffs right now are the surplus, $120 billion of surplus. And the reason for that specifically is the fact that Vietnam has become a factory of the world and factory for U.S. companies, the likes of Lululemon, as well as Nike. They've been producing products and exporting them to the U.S. And hence, a big question mark on why they're paying the price for what is, in fact, Vietnam being a factory for U.S. companies. So we're taking this conversation, the questions to a lot of the companies here. We're also speaking to Zuellig Pharmaceutical on the back of Trump talking about 200% tariffs on pharmaceutical companies. Keep it here with us. This is Bloomberg.
Let's recap that inflation print that we just got out of China just a few minutes ago. So the surprise was to the upside when it comes to CPI prices, right? 0.1%. And the expectation was for a fifth straight month of deflation. PPI prices, meanwhile, was in line, but actually was worse than expected, actually. But a 33rd straight month of factory price deflation. Interesting enough, BE is saying, don't be fooled by that positive print on CPI. No sign, they say, that deflation pressures are lifting. Really against the backdrop what they're seeing, right? That unexpected swing doesn't look as good as it looks, right? Second month in a row, they actually saw the CPI fall month on month. And deflation at the factory gates is actually intensifying.
I think it's also, you've got to make that distinction between demand-side inflation and supply-side inflation, and we had that immediate reaction talking about how actually that uptick that we saw in the CPI could have been more driven by those higher import costs and that spike in oil prices in particular. But if you see that sort of start to decelerate, really the trend for CPI still looks fairly weak.
And you add to the deflation pressures that you're seeing in this economy. It is really being weighing down on many sectors as well. You take a look at what's going on in the industrial sector. You take a look at what's going on EVs, food delivery, for example. I mean, certainly there's a lot of price wars that are going on. And you have seen regulators now trying to crack down on these very, very intense price wars. So Chinese financial and economic leaders have recently called for building a unified national market by curbing chaotic price competition and really ramping up the reduction of excess capacity. JPMorgan has a very interesting and timely note saying, while that may not be helpful for GDP growth, if the pledge is executed right, it can actually lift the equities market and trade. Let's bring in Wendy Liu, JPMorgan Chief China Equity Strategist, on that report. So may not be growth or job positive, but maybe equity positive. Tell us why.
I think it's about the more it's being produced, the more deflationary the price gets. So the focus is not about working more, but how to make the existing asset yielding a higher return. So it's equity friendly, and on the margin, if executed right, it could be helpful to the global trade in terms of easing tensions coming from China's overcapacity output spilling into the global markets. But short term, it's not GDP friendly or employment friendly. So it's a balancing act.
I mean, involution is sort of the word of the day, but it's certainly not a word we're unfamiliar with either. Involution has been an issue in China's economy for a while now. But how do you curb that, given it's also something that's happening within the private sector as well?
Right. I think it is first an understanding that there is a different path, that asset returns come from a balanced output and then balanced ASP, and then there is a potential for margin increases. And I think if we look at the APAC markets, current consensus estimate indicate that net margin is the lowest on MSCI China. So I think it's at the minimum awareness that this could be changed and for the better. And I think there are early signs that things are changing because the PBOC put in a put on the Asian market on September 24th, and they put in a put for the Hong Kong market via Safe Investment on January 13th. So I think there's a understanding that improving the asset prices could be quite critical in helping to stabilize the ecosystem right now and then try to drive better quality growth. So I think this probably indicates a broader understanding, but it's still developing at this point in time.
How do you compare what could happen to what we saw in supply side reforms in the past? You've been looking more on 2014 and really what impact it has on EPS, for example, and it takes some time, as you say.
Right. It took 45 months to play out in supply side 1.0. I would say to have this policy announced at the Central Commission for Economic Financial Affairs is significant because financial institutions have a stake in it. It probably means at some point the NPL cycle is going to go up. And now going back to 1.0, financial institutions were also quite important in getting the combinations done.
Yeah.
And just in terms of how stock traded, the first 12 months was re-rating. There was no EPS upside.
Yeah.
And very large increases in share prices in steel and coal. Steel went up more than 2 times, so it was a very good trading leg. And then people were disappointed because the earnings got revised down and the multiple probably run ahead of things. And so there was an 8 months decline. Both sectors got halved. And then it came the phase 3 where numbers got revised up and EPS got normalized and, 80% increase in coal and more than a double in steel. So I think we're at the very beginning of the stage. Yeah.
You made the point that it's not good for GDP, but it's also not great, perhaps, for the employment picture either if you do really try and crack down on overcapacity. If China can get it right, what's the upside then for the stock market?
Good question. So I think this might be phased over time, right? And I think the key policy sort of a goal under this administration has been stability. So they'll be done a little bit at a time, but then we kind of know that if this gets executed in a 3-year view, it will be quite different, right? So I've got a cycle framework for China equity analysis. And on the domestic side, there are 5 cycles, EPS cycle, business cycle, policy cycle, and then a property cycle. So all 4 has been moving along in the right direction. The missing piece has been the NPL cycle, which involves capacity exit. And once capacity exit happens, then new investment can come in at a lower price point. And I think among my investors, China has been an alpha market or a market that they don't want to be significantly underweight if there's a performance. But if you do have capacity exit and some of the cleaning up of the NPLs, and it becomes a beta market, then the macro narrative will change. So I do think there is the potential in the second half sometime for a breakout. So right now, we're anticipating a range-bound market, 70 to 80 on MSCI China, because there's a whole host of things to go through, on the trade front, tariffs impact on second quarter earnings, and maybe the July, stimulus isn't as great as anticipated. And summer tends to be difficult in terms of seasonality. I do think there is a case for a breakout.
Okay.
And we have analysis on this comparing MSCI China and topics.
If I'm looking at anti-involution, I'm looking at other sectors. I mean, what are sort of the key beneficiaries of this theme, and what other sectors are you focusing on now, Wendy?
There are a couple sectors where the net income margin has been very weak.
Yeah.
And then the multiples on a price-to-book basis are trading at more than 0.7 standard deviation below the mean. Okay, so that's where we see the opportunity. So steel, solar, battery, chemical, cement. Okay, and I think the market will probably track the events that are happening, voluntary output cuts and etc., and take one step at a time.
Wendy, thanks so much for joining us. That was Wendy Liu there, Chief China Equity Strategist at JPMorgan, out with a note this morning in the key takeaways that the crackdown from China on overcapacity could end up being a big boost to stocks, but we'll have plenty more ahead. This is Bloomberg. Taking a look at the market reaction this morning to some strong results from Sasa. Actually, this is the cosmetics and beauty retail essentially in Hong Kong, but they've actually had an increase in their first quarter same-store sales of more than 11%, and so you are seeing that strength being reflected so far in the session today.
All right, and we're watching these listings here in Hong Kong. Lens Tech, Geek Plus, Fortier, and Shunzhong. Mixed picture so far, but Lens Tech has come off some of the initial highs, but 48 Tech still doing quite well. We're up some 8%. Plenty more ahead. This is Bloomberg. 11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break in just a moment, and you are seeing when it comes to Nikkei just flat right now. We're watching very closely what this bond space is doing like after we saw the 30-year JGB yield surge yesterday. So there's a lot of talk about trade deals and what this looks like here ahead of that upper election in Tokyo and in Japan, I should say. So certainly that's what's leading to some angst in the long rates globally too, as well as we take a look at what's going on in the U.S., Australia as well here today as well. But there you go. Topics is doing a little bit better, but there you go. Yields are heading a little bit flat, if not stable, more in the Asia session, at least now. But yes, we talk about those domestic storms looming in multiple sort of markets like Japan, like the U.S. as well, Belle.
Yeah, well, certainly a moment perhaps where Japan's not wanting to make any major concessions, or at least look like they're making any major concessions to Washington. But as we said, trade is very much the key theme that we're watching across the board today in Asia. And we have seen stocks just looking a little bit under pressure so far in the session. U.S. futures fairly flat, so is the dollar gauge rather. Where we are seeing a lot of movement has been in the energy space so far, in the metal space in particular. Actually, I should note, given we've got this threat of extra levies being imposed on copper, 50%, but the pharmaceutical sector also another one to track, given President Trump is threatening 200% levies as well. But you are just seeing a kind of a mixed picture so far in the session today.
Yep, let's get to now the pictures out of Kuala Lumpur, right? The ASEAN Foreign Ministers meeting is underway there in KL. Oh, yeah. There's a show going on. Live pics there from the opening ceremony. And of course, the key sort of topic everyone's been talking about is U.S. Secretary of State Marco Rubio and China's Foreign Minister Wang Yi are also set to attend. And Rubio's trip really comes as President Trump threatens new tariff rates on several countries in Asia unless deals are done by August 1st. Let's get to our correspondent, Min Lo. She is at the event for us. Min, what's happening?
Yeah, as you can see, the opening ceremony underway. Anwar Ibrahim, the Prime Minister of Malaysia, is here. We have Chinese Foreign Minister Wang Yi and the U.S. Secretary of State Marco Rubio set to attend as well tomorrow. Tomorrow is a big day where there are a lot of dialogue sessions with key partners, including the envoys from South Korea, Japan, Russia, China, the U.S. And of course, this is taking place under the shadow of those tariff threats from Trump. He has sent out the first batch of those letters, many of them targeting Asian ASEAN countries in Southeast Asia particularly badly hit. Think about the 40% tariffs that Laos and Myanmar face, over 30% for Indonesia, Thailand, Cambodia, 25% for Malaysia. And while Marco Rubio is not in charge of trade negotiations, it is his first trip to Southeast Asia in his capacity as Secretary of State. He is the top, highest ranking official so far to have visited this part of the world. So he will most likely be getting a lot of questions about tariffs and to defend the White House's position when it comes to the need to rebalance trade in this region. Of course, the Chinese Foreign Minister Wang Yi is here likely to keep an eye on talks and ensure that Asian nations don't make deals with the U.S. that undercuts Chinese interests. And a lot of these ASEAN countries are really struggling to position themselves between U.S. and China because, of course, China is a huge stakeholder given that ASEAN's trade with China stands at about $980 billion US dollars, which is still more than twice as much as the volume of trade between US and ASEAN.
Yeah, Min, I'm just looking at this ceremony underway, and it makes me think this is probably maybe going to be the most positive part of this meeting, given just how many challenges these ASEAN nations are facing. You mentioned there about that sort of pressure that we see on countries now being exerted very verbally, it seems, by the US with their focus on BRICS, but also perhaps there's that question mark over China to essentially pick a side, which of course governments aren't going to want to do. But what can we expect in terms of progress on negotiations around certain deals? I'm thinking about Laos, Cambodia, following Vietnam.
Yes, Malaysia in particular as the host country has been calling on ASEAN to come together to form a united front so that they can at least leverage the collective strength of the entire bloc. Talk about 700 million people as well as a $3.8 trillion economy. But so far that unity is being tested by President Trump setting individual levels of tariffs from different countries, and already Vietnam agreed to that tier tariff system. Some other countries like Laos and Vietnam have really high levels. What are they going to offer in exchange for lower tariffs? And they're really in a hard place because many of these Southeast Asian nations are export-oriented countries. They do a lot of trade. Transshipment is a part of that because it's really hard to enforce given that a lot of products now is made up of parts from many different countries. So that's going to be in focus. Plus, not to mention President Trump's latest threat for that 10% penalty tariff on any country that aligns themselves with the BRICS nations. And remember, Indonesia just became a BRICS country earlier this year. Malaysia and Thailand are both partner nations of BRICS as well. Will they be getting those additional 10% tariffs? That's also something to get clarity from the United States on as well.
That's our correspondent there, Min Lo, reporting from the ASEAN meeting taking place in Kuala Lumpur this morning. But other headlines that we're tracking today, well, Brazilian President Lula da Silva is aiming to deepen trade ties with fellow BRICS member India. During a state visit to Brasilia with Indian Prime Minister Narendra Modi, Lula said he wants to triple trade flows with the South Asian nation from $12 billion last year. Brazil has been pushing to diversify its trade partners as US tariffs upend global commerce. The Trump administration is tightening its grip on foreign ownership of farmland amid continuing concerns over Chinese investment in America's heartland. The Agriculture Department says it will work with state lawmakers to end farmland purchases by nationals from countries of concern, or what it calls other foreign adversaries. It's estimated Chinese investors hold less than 1% of foreign-owned farmland in the US. China has added 8 Taiwanese military equipment makers to an export control list, accusing them of cooperation with what Beijing called separatist forces. The companies include Aerospace Industrial Development and CSBC. It comes with Taiwan preparing for 10 days of annual military drills, with a record 20,000 reservists called up. Local governments will also test their ability to maintain essential services and distribute supplies in a crisis.
All right, to our big take here right now, a big story that Bloomberg has really been investigating and learning that Chinese firms aim to install more than 115,000 Nvidia AI chips in data centers across the country's western deserts. Now, for more, let's bring in our senior global business reporter and host of the Big Take Asia podcast, Wan Ha. Wan, you've been talking about this construction boom that's happening near the Gobi Desert in Xinjiang. What's going on there, and why are there such big projects happening?
Yeah, it really is quite extraordinary, isn't it? Our Bloomberg investigation uncovered these public documents. We've seen, investment approvals. We've seen financial filings, company filings that show these Chinese companies want to build some 40 data centers across the Chinese desert. And they, of course, surprisingly want to power up these data centers with 115,000 Nvidia chips. The big problem with that is that, of course, these chips can't be legally purchased without U.S. government approvals. And the U.S. have, of course, said that they don't want to export these chips into China. It's a huge source of contention for the two countries, and we've seen that play out in talks. So how they plan to get these chips, these plans aren't spelled out. It could be just purely aspirational, but what we can see from these plans is that, of course, China has big ambitions and very specific plans to become an AI leader.
Yeah, it's interesting when you stack that up against that Bloomberg scoop we had around the concerns from the US of potential trade flows around Malaysia and Thailand in particular for chips. But let's talk about the location. As we mentioned, it's in the Gobi Desert. It's very far away from the major cities like Shanghai, Hangzhou, Shenzhen. What's the purpose of putting them there in particular?
You're right, it's super remote. I mean, our reporters had to jump on a plane and drive hours and hours to get there. Essentially, China is building out this physical infrastructure, right? You need these physical data centers because they're so critical to developing AI models and testing these models out. Why the desert? These, of course, because our reporters had to get to these remote places, we know that land there is cheap. And that, of course, is a huge cost saving when you're trying to build out such big infrastructure projects. The most important piece, actually, is that Xinjiang and this desert area is rich for green energy. Our reporters saw a lot of wind and solar farms out there. And so that really goes hand in hand with Beijing's push for sustainable development to really cut down the carbon footprint of these otherwise energy-hungry operations. So really, it's a strategic decision to put these data centers out in the desert to really help these homegrown companies.
All right, Juan, that was it's great reporting. That was Juan Ha there joining us. And you can, of course, get more on the big take. It's on the terminal if you're a subscriber or online at Bloomberg.com. Really worth checking out. And before we go to break here, just taking a quick check of the CSI 300 because it is rising actually this morning, just fractionally, but still on track for its highest point of 2025. So that is the picture there. Got more ahead, and this is Bloomberg. Let's head back. Let's head back to our coverage of the TechComBank Investment Summit in Hanoi, where hundreds of global investors and policymakers have gathered to discuss the potential of Vietnamese markets. Our Bloomberg Insight anchor Haslinda Amin is there with our next guest, and it is perfect timing given you've got the trade deal or the inklings of a deal with the US and Vietnam, but also just that pressure and that question marks over the pharmaceutical industry this morning.
That's right, the 200% tariffs that Trump is considering imposing on the pharmaceutical industry. And Belle, we also have headlines coming out of Vietnam this morning talking about how they're expecting growth to get to 10% in 2026 to 2030. That is ambitious as it stands. It wants to grow at 8% this year with those tariffs, 20% tariffs that the U.S. is imposing on Vietnam. That's already a big question mark. Anyways, let's delve deeper into pharma, into Vietnam, into its growth story. Exclusively joining us now, John Graham, CEO at Zuellig Pharma. Good to have you with us.
Good morning.
I'm just wondering, what's your first reaction that 200% tariffs on pharmaceutical, that's crippling.
Well, actually, it's the last thing you want to hear 2 minutes before you have an interview, right? But it's a huge surprise, obviously. 200% is, I think, completely unexpected and came out of nowhere. And we've gone from waiving tariffs on pharmaceuticals to now 200%. But I think the devil is going to be in the detail. What is the 200% going to be applied to? Is it going to be finished product, or is it going to be component parts of pharmaceutical products? We'll have to see.
200% tariffs on drugs going into the U.S. Which countries in particular will be most hit by it? Some say India.
I think a lot of the generic products that are being imported into the United States are coming from India, some from China, some from other markets in Europe. Some of the more innovative products are also manufactured in Europe. There are large manufacturing sites in Belgium, in the Netherlands, in Switzerland, and in Germany. We have to wait and see what impact, and Ireland, of course, as well, what impact those have.
The impact will be in the supply chain, right? Post-COVID, we saw that happen already. How might this further tweak and change the supply chains?
Yeah, I think it's important to understand that most pharmaceutical companies, since the pandemic and even before, have a strategy of understanding how to make their supply chains resilient. So they always look at dual sourcing the ingredients, or now multi-sourcing the ingredients, the packaging, all the different components that make up the final product. So I think that we'll have to wait and see how these different components are going to be affected by the import tariffs. But I think there will obviously be an impact on cost, and most pharma companies now will be scrambling to understand what impact these tariffs will have on their supply chain.
And will there be additional costs, given that companies are looking at onshoring, nearshoring, and perhaps an acceleration of those trends within the industry?
I think definitely an acceleration of these trends. I think that most companies have already thought about putting manufacturing plants closer to where their customers are. But in terms of innovative products that are coming out of the large pharma companies, these are today more biological products. In some cases, they have dedicated plants, and most companies now will be looking at locating at least one plant in the US, one plant in Europe, and perhaps even another manufacturing plant elsewhere in the world, so that they can cross-register products and cross-import products. Yeah.
For those not quite familiar with Zuellig Pharma, you don't produce your own drugs, you distribute drugs, and your focus area is actually Asia. You don't deal with the US market by design. How might you be impacted by the spillover effect?
Yeah, I think that we will be impacted by the supply disruption, perhaps, but not by the tariffs themselves. Most of the products that we are supplying within Asia are imported into Asia, either from the US or from Europe or from Japan. And so we don't envision any major impacts on our products and our business as it stands today.
We know that you do distribute drugs made by Eli Lilly, for instance. Eli Lilly, Merck, Pfizer. These companies, these big boys, have been investing billions of dollars in the US market to ramp up the capacity in the US in anticipation of the tariffs. What spillover effect might that have perhaps on a company like Zuellig Pharma?
Yeah. I think that most of these large multinationals have created manufacturing sites in the United States to serve the United States market and markets close to the United States. Most of the product that we are importing, a lot of it comes from Europe and other parts of the world. So we don't believe today that our multinational supply chains will be impacted to that extent, especially since most of our clients have already diversified their supply chain to a large extent.
So for yourself, for Zuellig Pharma, how are you looking at your strategy over the next 4 years?
Yeah, so we have two major business units. One is our pharmaceutical distribution business, where we distribute physical distribution for the large pharma companies. And then we have a commercialization business unit, where we actually work with either pharma companies or small to medium-sized biotech companies to commercialize their products in ASEAN. And because ASEAN continues to be a very dynamic and interesting growth market in general, we would expect to continue to invest in these businesses in Asia.
Let's talk about Mounjaro in particular. Of course, you got the rights to distribute Mounjaro in Thailand. Talk to us about the demand in Thailand and perhaps the demand you're anticipating in the rest of Southeast Asia.
Yeah, I don't think it's any different to anywhere else in the world. Mounjaro, of course, is in high demand. I think the important thing is the general public need to understand that obesity is actually a chronic disease. It's very little to do with the cosmetic aspect of the disease. And so what we're trying to do is educate patients and healthcare professionals to treat obesity as a disease. And what we see across Asia, actually, is that obesity is a silent pandemic, if you like. It's on the increase. Changes in lifestyle, the diets that people have, the lack of exercise, etc., is leading to an increase in obesity. And obesity itself has a lot of knock-on effects. So if you are a patient with obesity, you are at risk of having cardiovascular events, liver
But John, what does
disease.
that mean in terms of demand? What kind of demand are you anticipating? What kind of growth are you anticipating as a result of the need to address that?
Yeah, I think because this is one of the first drugs ever to be able to significantly reduce weight, we believe that the demand for this product will be very high.
Can you put a number to it?
Not at this point.
What numbers are you seeing right now?
We're seeing tremendous reception for the product. Demand is very high.
But no numbers?
No numbers at this point.
But you're anticipating accelerated growth, and you might want to be a distributor for the rest of the region?
We have a multi-year relationship with Eli Lilly, where we work with them in 4 markets in ASEAN. So we would expect to launch Mounjaro in all 4 of those markets in the future.
What is the goal for the drug going forward? I mean, is there any effort to bring the cost down, for instance? It is an expensive drug.
Yeah, at this point, there's no intention to bring the cost down. It is an innovative product with tremendous efficacy, and we believe that the cost benefit at the current level of pricing is absolutely appropriate.
John, before we let you go, we want to talk about the projections made by the government in terms of GDP growth. The target is 8% this year, 10% 26 onwards through 2030. Yeah. Is that achievable, given the 20% tariffs that's being imposed?
Yeah. Well, my experience with Vietnam is that it's a very agile, very entrepreneurial country. We're very committed to the business in Vietnam and the growth that Vietnam is aspiring to.
But when exports get hit, what will compensate for that?
Yeah. We will have to see how the tariffs impact the overall economy, and we believe that will have a trickle-down effect even on the pharmaceutical side of the business and healthcare. But Vietnam has surprised in the past, and I would expect they will continue to surprise us.
On that optimistic note, John, we thank you so much for joining us. John Graham there, CEO at Zuellig Pharma. Heading back to you, Yvonne.
Very timely conversation there. Thanks to our Haslana Ahmed Inside Anchor in Hanoi for the Tech Comeback Investment Summit. And subscribers can watch us live and see our past interviews in our interactive TV function, TV Go. You can also dive into any securities or Bloomberg functions that we talk about and become part of the conversation by sending us instant messages as well. Check it out at TV Go. Happening this hour has been this NDRC briefing, which we've been trying to track some of the lines crossing there. And what we're hearing so far is talking a little bit more about the economy. So they're saying domestic demand remains China's main growth driver. That's according to the NDRC secretary that was speaking the last hour as well. And also talking about decoupling, containment boost, China's self-reliance resolve. So again, given what the trade tensions are like, you still see this whole sort of pressure and, I guess, efforts to really boost innovation domestically in China.
Yeah, but I do think it's interesting when you talk about sort of trying to lift consumption within China. It doesn't really dovetail that nicely with the inflation figures we just got out in the last hour, because we saw, yes, a slight increase in the CPI index, an unexpected one as well, rising 0.01%. But there is that question mark over how much was this down to maybe an increase in oil prices, how much as well is it an impact of government subsidies, trade-in programs that will have to end at some point.
All of which might fade, right? Certainly that is the key question there. And as we've been talking about this whole issue of overcapacity in sectors like EVs, in sectors like food delivery, that's adding to those deflationary threats and pressures as well. So certainly that's what we're hearing when it comes to the NDRC side of things as well in terms of the market check right now. We're pretty much, I mean, you're not seeing stocks doing too much, to be honest, given what we've been seeing with the headline risk that we're seeing when it comes to President Trump and the like. But we are watching some individual sectors like childcare stocks, for example, as well.
Yeah, that's right. And actually, just on that sort of final point around stocks, I mean, I guess they don't have to rise that much further because we've got the CSI 300 already looking at its year-to-date high, or a fresh year-to-date high for 2025. But yes, that focus on what we see for childcare stocks in particular this morning, we are seeing gains here across the board. The government here is vowing to expedite development of an inclusive childcare service system. I mean, it's interesting when you see that effort from China to try and build on their childcare service centres. You do have that big question mark again, how much upside is there, given we had those question marks last week around these more subsidies, and that proved to be very short-lived?
Yeah, I think Bloomberg last week reported that Beijing was planning to offer these sort of cash handouts to families as incentives for couples to make some babies, right? As, of course, we deal with the population decline and the like. We're watching very closely the biotech space as well. You know, this whole 200% threat on tariffs. In the pharma side of things, we're actually seeing a decent picture when it comes to some of these pharma stocks here this morning, as well as, of course, Trump hardens his threats against pharma. But, you know, we're watching also the copper side. So today it's pharma, and today is also about copper. There you go. Following the price that we're seeing, the LME contracts, as well as in Shanghai here, on the back of those 50% threats of tariffs when it comes to copper. This is Bloomberg.